Traders love to argue until they're literally blue in the face between what is more important between technical analysis and your strategy and trading psychology. Now, you could be born with the most amazing natural born trader's mindset in the world. And if you are, then happy days, good for you. But if you don't have a proven profitable strategy in your hands, then you're not going to make any money, right? So at the start of your journey, understandably, it is a lot more important, in my opinion, to focus on the technicals, to develop that strategy and prove you have a strategy edge. But then further along in your journey, that is when you quickly realize, as you start to try and scale up, trade live capital, etc., that actually it's about 80-90% of psychology is going to be the difference between whether or not you are profitable at that point. Now, thanks to the regulations in the EU, if we look at many of these regulated retail brokers, we can see at the top of most of their home pages the stats of their winning and losing traders on their websites, right? So if we can see that on average about 75% of traders are losing, then you could be forgiven for thinking, well, why don't we just find out what they're doing, right, and do the opposite of it? And then that way we can be in the winning 25%. Well, okay, let's dive into that. What is normal in trading? So back in 2015, FXCM did a study of 25,000 of their traders, and they looked at 43 million trades taken. And they actually saw that 62% of the trades were winning trades. But what's going on here? Well, when they took a winning trade, they only made on average a gain of 48 pips. But when they lost a trade, on average, they lost 82 pips. So we can quickly see here that their losing trades were almost 70% bigger than their winning trades. So as a result, over the course of, let's say, 100 trades, that's going to be a 140 pip deficit, which means you have a negative profit expectancy in the long run. Now, this is not a strategy problem. It's not really a technical analysis problem. There are hundreds, if not thousands, if not millions of profitable strategies out there. You can trade the market any single way you want. There's thousands of strategies on YouTube that are probably successful. This is more of a human problem, and I'm going to show it to you. So an absolute classic psychological error in trading that I'm sure you've experienced, I know how I have in the past, is moving your stop loss to break even when it's not within your rules to do so. So let's say your strategy tells you to buy here for whatever reason. You get in long and the market starts moving nicely in your favor. So what do? You move your stop loss to break even if it doesn't stay in your rules, simply because we want to remove any potential risk on the table. And then, as you probably experienced plenty of times, the market will then come back to your level, stop you out for break even, and then goes on eventually to your profit target. Okay, so this is just one of many mistakes that traders are making that is not conducive to a long-term profitable edge. So if you break your rules by trailing your stop loss to break even too early, what's the reason? You're scared of taking a loss. And the subconscious reason of that is because you were trying to avoid the pain of losing money. Now, Tom Hugard did an amazing lecture on this where he breaks this down, right? And there's so many common mistakes that we as traders make, right? Taking low probability or even invalid trades. Why do we do that? It's because we get FOMO, right? We're scared of missing out on potential, profits. But what's the subconscious reason? It's the same thing. It's to avoid pain, right? The pain of potentially missing out on what could be ours. Another one, not executing another trade after you've taken a winning trade. A reason is usually because, well, I've made some money. I don't really want to give back any profit today. I'm happy with what I've got. But you're not executing your edge. And what's the reason? Again, to avoid pain, the pain of potentially giving away that profits. Taking profits too early, right? Not following your management plan. Similar thing, you want to keep on to what you have. Why? Avoid pain. Avoid pain of losing that perceived money of what you've got within your account. The other thing, increasing your position size after a loss. Why do you do that? Well, you want to get back to where you were, right? You don't want to go home with that loss. You want to get back to break even or make some gains. Why? You want to avoid pain. Now, I'm sure we've all been there, and I'm sure we'll make some of these mistakes in the future, but it's only afterwards, once you're out of the trade and you've made that mistake and you look back and you just think, what is wrong with me? Why am I an idiot? Why do I keep doing this? Why am I stuck in this perpetual cycle of making mistakes that's stopping me from getting to where I need to be? Okay, today I'm going to show you exactly why that's happening. I'm going to show you why it's not your fault, but then show you the key of what you now need to do to prevent this from happening in the future, or at least drastically reduce the amount of times this happens. So we're going to get stuck into some super esoteric stuff. We're going to look at biology, we're going to jump into physics. I'm super pumped to get stuck into this, so make sure you stick around. But who am I and why should you listen to me? Well, I am Matt Donlevy and I am the founder of Photon Trading, and we help traders not just acquire funding, but actually bank their profit splits long term using the power of mechanical strategies. So like I was saying, you probably make one of these mistakes, you wonder what is wrong with you, but actually there is nothing wrong with you. We are walking around with the same brains in our heads that were formed 200,000 years ago, okay? So we are literally walking around with the same hardware as our Paleolithic ancestors. Back then, we lived pretty much in an immediate return environment where having that fight or flight response was extremely conducive to survival. Whereas only in the last 500, 100 years, maybe in 50 years, that we have had insane technological advancements that has led us to now living in a delayed return environment, okay? So our brains are designed to value those immediate returns, to respond to those fight or flight responses, rather than making the decisions that are conducive to long-term success. So what does that have to do with trading? Well, let me explain. When you're in the markets, right, you've probably experienced this with your demo trading, you have your profitable strategy, it's quite easy, a lot of people can make money. But as soon as you have that real risk on the table, whether it's your own high capital, you've scaled up, you're going for funding challenges, whatever it is, suddenly it all becomes way harder, right? Your brain almost melts, and that's because your primitive survival instincts are taking over that decision making in critical moments. In other words, when you are stressed, it's extremely hard to make the right decision when you have risk on the table. Okay, we are using our primitive ancestral brains to try and fight Japanese candlesticks rather than fighting saber-toothed tigers. So it's extremely hard to do because back then, you know, that is an evolutionary advantage of our brains, right? To be wired to want to win and survive at all costs. Back then, trying to get your lunch could literally kill you. So you had to believe that you were going to win. You had to believe that you were going to overcome that challenge, and you were going to be able to, you know, win that hunt. Otherwise, you either weren't going to hunt and then you would die from hunger, or you'd probably end up getting killed by that animal, right? Because you're going in with the wrong mindset. Now, that has served tons of evolutionary purposes and benefits to even our lives in the modern world today, right? To be competitive, to want to win, to do well in business, etc. But bringing in that mindset into trading is a recipe for disaster. Wanting to win at all costs, wanting to avoid the pain of losing money, we know is going to lead to the, you know, not most optimal trading decisions of allowing our edge to play out over time, okay? And to explain that in a more succinct term, it's this from Randy Howe. It says your brain's short-term survival orientation is going to compromise your need to take that long-term perspective in order for your edge to work in the heat of the moment. Okay, so what that means is we know we're going to have losing trades in the short term, losing and winning trades, right? It's just the cost of doing business. But over the long run, we know our edge will play out. But then when you're experiencing that losing trade in the moment, right? That's when your brain goes into meltdown. And we end up making those mistakes that we just went through, taking your profits too early, avoiding trades, etc. Because we can't think about the long term. Our brains really, really struggle with that. And why? It's a biological reason. Our brains, our caveman brains, they view all market uncertainty or any uncertainty in your life, any risk, it views it as a direct biological threat to your life. Okay? So those Japanese candlesticks on your charts, when they're moving around and you feel some uncertainty of the market environment, the probabilistic nature of what we're trying to deal with here, the potential that we could lose some money, your brain sees that as a biological threat to life. And that's when your fight or flight responses kick in and you end up making those mistakes. So let's apply this to a trade example, right? As it's a lot easier to then understand. Now, we've all probably felt this, right? We get into a trade, it starts moving nicely along in our favor. But if price starts to pull back and go into our stop loss, and then we see, you know, it flashing red against us, we have that risk on the table, our heart rate starts to go up, right? You feel those emotions, and that's because your biology, right? Your animal brain is seeing that as a direct threat to your life. And this is when your emotional brain is going to hijack your thinking brain, and you're going to, you know, make those mistakes because it sees that threat as a threat to life. It's a threat to your financial health. It's a threat to your trading goals, right? It's a direct threat to you getting funded potentially. It's a direct threat to you quitting your job. Perhaps it's a direct threat to your ego, right? Maybe you shared your trade before you got into it in your community, or maybe you posted on social media. Maybe you made a post about how you're going to smash your day and make loads of profits. Now, all of those thoughts are now swirling around in your brain, and this is like danger. So at this moment, what do? Well, I'm only 0.5% down at this point. Let me just get out because I don't want to take the full loss. I'm probably going to take a full loss. So what do? You close the trade for, let's say, half an hour loss, and then we play the price forward, and then it ends up going to your favor if you had to just stuck to your rules. And then you look back afterwards and you just think, what did I do? Why did I do that? And it's because your animal brain, your amygdala, it hijacked your thinking brain just to protect yourself at all costs from experiencing any pain. So when our emotions are going up like that, our decision making is going to go down, and we'll make decisions that don't appear to be based on any logic or reason. It's because our emotional brain is taking control. And this is when we make a number of, classic and typical actions that we've all made and probably will make in the future. And it's all the subconscious wanting to avoid pain. Now, we are taught from a very young age that only winning and being right is pretty much rewarded, right? Whether you win a trophy in sports or you get your grades on your exams. Now, I'm not someone who believes in awarding everyone a participation medal, but bringing this, only winning and being right mental model, which serves us well in most areas of life, but bringing that mental model into trading, it's terrible. It's the worst environment to bring it in. It's not a normal environment. We need to be extremely comfortable with the idea of losing, with having that uncertainty and risk on the table and dealing with a probabilistic environment. A successful trading mindset requires you to not care about winning. It requires you to not care about being right. And ultimately, all that matters is that you make money in the long run. We know in a conventional business, think like a brick and mortar business, you have costs, you have rent, you have supplies, wages, insurance, etc. But then you make your sales, and then hopefully you make more sales than your costs, and your difference is net profit, right? Everyone gets that in business, it's fine. But in trading, most people are trying to avoid those losses, okay? But actually, if you just view them as the same way, they're simply a cost of doing business. Taking a loss is just a cost of allowing your edge to play out over the long run so that eventually you have a net profit over time. Now, that's an extremely simple logical concept for us to understand, but here's the problem. We are not logical beings. We are emotional beings who then try to rationalize our emotions with logic. Really, it all boils down to the problem with the brain on uncertainty. Our brains, our animal brains that we have evolved with, they want to control the outcome. They always want to be right, and it wants to predict the future. But none of those three things are controllable, but we are hotwired to think that they are, and that is what causes, or what makes trading so hard in the long run. So let's dive into a bit of biology here, right? And just think about two parts of the brain. First here, we have the amygdala. So the amygdala, we can think about this as our lower-minded animal, this primitive brain that we have been talking about, okay? Now this part of our brain, it constantly wants to seek pleasure and avoid pains, right? Avoid pains at all costs. So this is where, our emotional center of the brain is. That is just rooted to think about survival and protect us at all costs, right? It's our primitive brain. Now here we have the neocortex. So think about this as more of a higher-minded animal. This is responsible for our self-governance, strategic thought, and execution, okay? So rather than just thinking about imminent survival, this is thinking more about, long-term thrival and, your advanced thinking part of the brain, okay? Now, when you are stressed, which is a lot of the time when you're trading, right? When you have that risk on the table, you're trying to go for a funding challenge, whatever it is, all that perceived sensory information, right, comes in and it gets processed by the amygdala first. And that is where that emotional brain is kicking in with that flight or fright response. And it essentially can hijack and block that information going up to your neocortex, which is where your thinking brain is. Because the amygdala, that makes decisions in nanoseconds, and it leaves you making impulsive decisions before you've even had a chance to think, why did I even do that? Before you can think it through. So our job as traders is to try and regulate the emotions that happen in the amygdala and allow that to come up to the neocortex. Then we can make the correct logical decisions that we know is conducive to long-term profitable trading. So again, remember, our brains, our amygdala, it cannot see the difference between what is a true danger to your life, right? A biological threat to life, biological fear. It can't differentiate that between that and what is literally just the psychological discomfort of having a bit of risk on the table. So to the untrained brain, any triggering of that threat, it automatically produces biological fear responses in our body, right? From our primitive brain. I'm sure you've experienced it. Trade starts going against you. You sit forward in your chair, you feel tight, heart rate's going up, you start sweating, whatever it is. That is what is going on there. Your brain can't tell the difference between essentially like a saber-toothed tiger coming at you, right? And just potentially you about to lose a bit of money or lose a funding challenge or whatever it is. Because it seems so simple. I have a plan, I follow my rules, I'll make money. I can do it on a demo account, I can do it when I'm back testing. I bring that plan into live market where I have that real risk on the table. And as Mike Tyson says, everybody has a plan until they get punched in the mouth, okay? Fight and flight response will kick in, and then those behavior patterns of fear and aggression or avoidance, those will kick in, and that's when we make those classic mistakes. So let's take these two parts of the brain that we've been talking about and let's draw them into a diagram, and we're going to jump into some juicy stuff here now. Right, so think about your higher animal mind at the top. This is your soul, your objective truth. Down at the bottom, this is our lower animal mind, right? Our primitive brain. Think of this as like the physical realm. So all of our senses, what we can see, what we can touch, and what we can smell, what we can hear, etc. So up at the top, think of this as light. Now, science tells us that if you are a particle of light, right, you are a photon, you do not have any time, you don't have any space, you don't have any charge, and you do not have any mass, okay? Now, if you take two photons, two particles of light, and you smash them together, they will split into an electron and a positron, okay? So now you have these, and these do have mass, these do have charges, they do have space, and they do have time, okay? Now, an ion is a charged particle, okay? That's what science tells us. What psychology tells us is that an emotional person, right? We say they're a charged person, right? They're charged with emotion. So down here, if we think about positive charges, right? Positively charged emotions. Elation, right? You're completely happy. A lot of people, a lot of the masses are constantly trying to chase this elation, chase this happiness, chase the positive side, right? All the positives without negatives. They're trying to chase the winning trades and avoid the losing trades, avoid losing money. All they want is that. But the more that you sway away from being centered and balanced, the more you're trying to chase that one pole, chase that one side, chase only the winning trades and the happiness, guess what's going to happen? You're going to snap back completely the other way, okay? So the more that people are constantly just trying to be elated, you probably met them, guess what? There's some of the people that really struggle with depression when eventually they snap back the other way. They're not calm, centered, and balanced in the middle. And this goes for every polarizing emotion, optimism and pessimism, right? Pleasure and pain, greed and fear. Those are the big ones in trading. So, the more you chase to one side, the more eventually you're going to snap back. It's Newton's third law, right? For every reaction, there is an equal and opposite reaction. So the more you sway away from the center in the middle, the more likely you're then going to snap back the other way. And this is where the masses are, down at the bottom, trying to chase to one side, right? Trying to continuously chase pleasure and avoid pain, right? Getting drunk on the weekend, doing drugs, whatever it is, just trying to escape from their mindset. And then what happens, the more they chase that, the more they push it, comes Monday, they're going to swing back to that depression, that hangover, and that anxiety, okay? So this is where the masses are down here. Now, what I want you to think about, the reason why I've drawn the diagram like this, like a triangle, is that there's a pendulum, okay, swinging down here. So this is where the masses are swinging from pole to pole, from trying to chase the positives, swinging back down to the negatives, okay? So this is a low vibration. Now, as you become more and more centered, and you don't chase the two sides, and you stay in the middle, right, naturally your pendulum is going to swing less and less and less, and you're going to get smaller and smaller vibrations, so you're essentially vibrating on a higher frequency, okay? So evolution is towards the light. So our job as traders is to do that, right? Is to stop swinging between those two poles and to try and see things objectively as they are, rather than being blinded by our emotions, in the moment, what we spoke about. Okay, that's where the masters are. The winning 10, 20%, whatever it is of traders at the top, they're the ones who can do that. So down here, remember, we have our lower animal minds, the emotional center. Up at the top is a higher thinking mind, where we're no longer, swayed by those emotions, but we can see things objectively as they are. So to try and bring this back into a more simple example of what we're talking about, when we made all those mistakes before, you're in a trade, the emotions get high, you break your rules, you jump out of the trade, whatever the mistake is. Afterwards, that evening, the weekend, whenever it is, and you journal your trade, the emotions are no longer there because the risk is no longer on the table, right? It's over. You can think about it with your higher mind. That is when you are calm and centered, and you can see, this is what I should have done. There was negative or positive confluence that I can see now, but I missed it in the moment because I was so attached to one side, right? Like you're in a trade and it starts going against you. All your brain can see on the chart is reasons as to why you should get out of the trade, right? You are blinded to the objective truth, seeing everything. Your brain literally plays tricks on you because it wants you to avoid that pain. Your amygdala is trying to protect you, so it just wants you to get risk off the table. Your amygdala, takes over, and it's not letting that information pass through up to your thinking brain. So another way to think about this diagram is like, Let's say you win a trade, followed your rules, you win a trade. Do you then jump up, start fist pumping, high-fiving your mates if they're like getting super happy about it, posting screenshots of your MT4 everywhere, getting super excited? Okay, cool, you do that. You chase that positive side, you're all the way over here. What do you think then is gonna happen when you inevitably take a losing trade? That's gonna hit you so much harder, right? And you're gonna swing into that depression, that fear, that pain, whatever. So the more that you chase the one side, the more naturally you're gonna go the other way. So a simple exercise to do is next time you take those winning trades going forward, win or loss, try and just practice regulating no emotion, right? No physical reaction, no emotional reaction. Just, did you follow your rules? Did you follow your plan? Yes. And you should ultimately strive to feel the same way no matter what, right? Win or lose, did you stick to your rules? That is all that matters, okay? So how do we do that? How do we stay centered, calm, and balanced so we can strive to evolve towards the light, right? So we can become photon traders, particles of light, so we can see that objective truth and we can make trading decisions with our higher mind. How do we do that? Because like we keep saying, right? We now know that we are wired to fail. The brains that we are bought with cannot give us the success that we seek with trading, right? Because we are asking our brains to do something that is a nightmare. It's to deal with the risk and to be okay with it and to accept it, right? What nature has given us is not what the artificial world of the market needs. Right, we need to retrain it and rewire it to be able to deal with those probabilities, to make the right long-term decisions, and to be comfortable with risk in an uncertain environment. Right, so how do we evolve towards the light? Well, we can allow our thinking brain to be in control. Well, you've got two solutions here really. The short-term fix is to build and develop and acquire a mechanical strategy. Right, one where you have a very tightly defined system where the rules are so crystal clear that you know what to do in every single scenario. Okay. And that's going to give you the biggest chance of being able to stick to your rules and not let those emotions dictate your decision making. Now, the long term, we need to work on rewiring our brains, becoming the designer of our minds so that we are not essentially slaves and victims of those flight or flight responses. Okay? In my opinion, both of these are required. This is the path that I'm trying to go on my own trading and what we try to teach at Photon Trading. Okay? So mechanical trade plan, if you don't know, like I said, it's essentially something that just tells you what to do in every single scenario. If this happens, I do this. If that happens, I do that, right? Okay, you have a very tightly defined system. Because once you have that, you learn a mechanical strategy, you build a mechanical trade plan, you can then quickly prove your edge in the market with backtesting and forward testing, prove the data behind it that it works. Once you have that data, this is the quickest way to get that more bulletproof mindset, right? So you can rely on the data and you know that in the long run, following those rules will be profitable. That then gives you the consistent results because you're making consistent, correct actions in the market. And now you have a sustainable method that you can rely on, right, to scale your accounts and to grow your capital long term. Okay? And that is exactly what we help our traders with at Photon Trading, where we literally hand them our exact mechanical trade plans for both our day and swing trading strategies, right? We help you implement that into the market. We help you collect data on that to prove it quickly that your trade plan has an edge. Your brain can then see that. It becomes a lot easier to follow your rules in the long run, okay? And you can see all of our case studies here on the website, some of our members who have had really good success with this. So we do this for you, our full end-to-end course. Absolutely everything is covered, even if you have zero knowledge in the market. So this is all done for you, where we literally teach you and hand you our strategy. But we don't just leave you there. We show you day in, day out, session by session, how we implement those mechanical rules into the market and capitalize on different market conditions. We have daily session recaps every single day, going over this in depth, markups, analysis a lot. And of course, we have our community on Discord, where you can ask any questions. They all get answered. The level of mentoring in here is just unrivaled. You will not get this anywhere else. You can see here just the course. We've got over 148 lessons, I think, at the moment. We go super in depth there. Every single topic is covered in extreme depth. We have tons of lessons and even more lessons in here hidden beneath, as well as all of the session recaps, trade recaps, backtests, live meetups that we have. It's just an insane amount of useful resources within here. And then of course we also have the community, like I said, where we've got all of our markups posted every session for 3 pairs. Every day in depth where we go through this. We've got swing channels, analysis channels, day trading, the lot. It is absolutely insane. So if you're interested, click the link in the bio below. I would love to work with you. I'd love to get our plans in your hands, work with you to develop them, get them in there, build that bulletproof mindset, and start making consistent gains. Now, all trading strategies fit somewhere along the scale, where on one end you have completely discretionary, right? So you almost have no rules, all the way to 100% mechanical, where literally that is how you would have to have something that you have coded into an algorithm, right? Where there is zero room for human discretion. In my opinion, if you are a manual trader, right, so you're a human who executes your strategy, I believe the sweet spot is kind of around that 70 to 80% mark, where you have some room for human discretion, as that's actually what gives you an edge over algorithms, because you can take in all of that information based on your intuition and experience with many different variables and choose whether or not to execute a trade, okay? Now, even if you had a strategy that is 100% mechanical and you had an algorithm executing it, so you're not even getting involved, I've still seen people who have this in their hands, they have access to an algo, and they still let their psychology get in the way and they mess it up, right? It goes into a bit of expected drawdown, but their brain can't handle it. Their amygdala can't handle it. Fight or flight response comes in and they turn off the algo and they wait until they see the algo starting to make those profitable trades again, right? And then they turn it back on. But if you know anything about trading and trading an edge, that's a recipe for disaster, because you cannot predict when your winning and losing trades will be, okay? We are dealing with random distribution. So no matter what, we need to rewire our brains, because the brain that we brought to trading cannot give you the success you seek until you do this. Now, rewire your brain, it sounds like a bit of an iffy concept, but scientists are now proving that this is literally biologically possible through neuroplasticity, which is the ability of the brain to reorganize itself, both in structure and how it functions, okay? Beyond the scope of this lesson, we're not going to dive into the exact science behind that, but it's about, we need to become, this is what Randy Howe talks about, learning to become the designer of the mind that engages that uncertainty of the markets, rather than letting our fight or flight response taking over, okay, from our primitive brains. This way, as he says, we move from the fantasy of trying to control the outcome, trying to control what will happen in that individual trade. Okay, we cannot influence that. Instead, what can we influence? We can focus on the things that we can control, and we can control the mind that we bring to managing that uncertainty. So what does that mean? Well, it means that when you have that uncertainty and risk on the table and the trade's going against you, you don't interfere, okay? You feel the emotion, but you do not act upon it. So like I said here, we have random distribution. So you might know your stats tell you that your strategy has a 60% win rate in the long run. So when our brains think, yeah, okay, every 10 trades we'll probably have 6 winners and 4 losers. But we have no idea what sequence those wins and losses will occur. And that is an absolute mindfuck for us. It's so hard to deal with, right? Because we want to win. We don't want to experience those pains and losses. We don't want to have 3 or 4 trades losers in a row, right? We want it to be predictable, which is really, really hard to deal with. So we need to learn to manage the emotions that give rise to the mind that engages that uncertainty, right? We want to learn to approach it with discipline, impartiality, and to be patient, right? To have that long-term vision. So you're always going to feel these emotions, but you need to learn to choose one thought over another. Let your thinking brain be in control. And as Randy Howe says, you need to let go of the need to win, and then your job becomes one of performance instead. You need to win every trade. It's not like a sports game. You need to be in control of the things that you control. How do you do your analysis? Do you turn up on time? Do you journal your trades, right? All of these things. And then when you have that mental edge in place, that is then what drives your strategy edge. Successful trading is really those 3 things: having a profitable strategy, having the correct risk management in place to allow it to play out, and then your mindset is what then allows you to stick to your rules and to allow that to play out. You need all 3. So a good analogy is to think of a trader's mindset as like a surfer, okay? The surfer is not trying to fight or control or predict the wave. The surfer lets whatever wave is produced, whatever price action the market wants to do, and he learns to go with the flow, right? He learns how to deal with whatever wave presents, whatever way the wave wants to move. He learns how to deal with it and goes with the flow there. So bit of a simple analogy there, but I think it's something that kind of made a lot of sense to me, that helped me to think about that. Not getting attached to biases, going with the flow of how price action moves. Literally think about it as order flow, if you will. And yeah, I think it's a pretty cool way to think about how we want to be. Because it's paramount to think the correct way, otherwise you will be emotionally robbed of your greatest opportunity. Now, this lecture was inspired, like I said earlier, by Tom Hugard, the Hermetic Principles, John D. Martini, Lewis Mocker, and Randy Howe. So do feel free to go and dig in deeper into some of these resources if you so desire. So hopefully you now understand a little bit more about the brain, what it is that we are trying to deal with, why we make those mistakes that we make, because the first step is understanding the why, because then that allows you to take the responsibility of your actions going forward. You now know what you need to do to start to work on that, to start becoming the designer of the mind, to start trying to regulate your emotions so that we cannot let our amygdala, our lower animal mind, keep taking control and stopping us from making those long-term decisions that are conducive to profitable trading. So the short-term fix, get a profitable strategy. The easiest way to do that is make it as systemized and mechanical as possible within reason, prove your rules, collect data on it, and then from there you can build on it, whilst long-term working on developing that mindset. So I really enjoyed this lecture. You know, there's a lot of other people in there who have influenced this that I've taken from and kind of mixed it all together with those philosophies that I've now applied to trading in a way that makes sense to me. So I hope you guys resonated with that. It's not for everyone. It is what it is. But yeah, if you like that, let me know in the comments. Otherwise, watch these next 2 videos to make an instant improvement to your trading. Cheers.